I wish to express my concerns regarding the governor's request and the Michigan Catastrophic Claims Association approval to issue approximately $3 billion in refunds to auto insurance policyholders prior to this summer's legally required third-party audit of the fund, in accordance with Public Act 21 of 2019, which we just passed 2 years ago. One of the major components of the no-fault reform legislation, and one of the reasons it garnered such broad bipartisan support, is that it guaranteed an independent audit of the MCCA to accurately assess its assets in comparison to its anticipated obligations to the catastrophically injured. Only 6 months have passed since the provisions of the laws were implemented. The full impact of the law has yet to be determined, so it is premature to dramatically reduce the balance of the fund. More than 1,500 Michiganders with catastrophic injuries lost some or all of their care due to the changes in the law. And more than 3,000 people lost their jobs. On July 1st, the state's new auto no-fault law imposed dramatic cuts in payments to companies and families providing care for the catastrophically injured. The payments were slashed nearly in half, and in many cases, providers are now being reimbursed for services at well below the actual cost of providing the care. In a recent study, matter of fact, just this morning, 96% of the organizations reported that their services were impacted by the payment cuts. 51% had to significantly reduce services and products. 35% cannot accept new patients with auto insurance funding. 11% had to discharge patients, which I find incorrigible. And 8% had to close operations completely. No one doubts that there is likely an excess of funds available to issue these rebates. However, it has not been established as what is needed to satisfy future obligations, nor that the policy goals of the 2019 reforms, across the board reduction in costs, improve accessibility and affordability of insurance, and continued quality care for current benefit recipients have been reached. The legislature deliberately included provisions in the Act to require an independent audit to be conducted in 2022, not last year, 2022, with sufficient time to accurately assess its impact before the funds were issued in 2023. That's in the law. I employ the governor and the board of the MCCA to follow the law and await the results of this summer's audit before significantly reducing the balance of the MCCA fund. I would also like to point out that, as with all legislation of significant scope, when we developed, negotiate, and passed SB 1 of 2019, we got a lot of things right, but we missed the mark on a few other items. Among the latter, I count the intended solution to the problem of excessive provider charges from a limited number of care providers, which severely impacted all of the providers of care for the catastrophically injured by creating a fee structure that fails to allow realistic payment for vital services and has driven many out of business, resulting in catastrophically injured patients receiving a dramatic reduction in care. If we destroy that industry in our state, it'll be catastrophic later, not just now, but also later. I'm also therefore committed to continue advocacy of legislation that I and others have developed to address this inadvertent but none less than egregious error in the original reform legislation. I encourage my colleagues in both chambers and the governor to speak with affected constituents